So, well, good morning, Ash.
Hello, Kelly. Yeah, well, good afternoon for me.
Right, you're 5 hours ahead. You're in England, right?
Yeah.
And where are you in England?
So I'll probably say Cambridge is the closest city. So if I say that the town where I'm in the middle of Suffolk in East Anglia, Cambridge is about half an hour away. So that's normally what I say.
Oh, okay. I do the same. I say I'm from Toronto as a starting point, but I'm actually an hour west of Toronto. So I'm not actually from Toronto.
Oh, yeah.
Right. But you got to start where people would know something, right?
Yeah, it's easier because if you say, oh, I'm in this little town from Haverhill, and then everyone just sort of goes, yeah, I've no idea where that is.
Right. Okay. So just as a quick little introduction, I am Kellie Parks. I am a certified professional bookkeeper here in Canada, but I also do work on US Pro Advisor or QBO files. So I do bookkeeping in both US and Canadian files. My specialty is actually doing bookkeeping for accounting firms where I do their firm's books. That is my odd little thing. And I work with app partners like nettTracker. So I work with all kinds of technology partners in our space, and I sell cloud accounting templates as well. I have a Facebook group called the Workflow Watering Hole, which is where we met. Somebody put you onto the Facebook group, and then you sent me a note, and here we are today. And you are Ash Beetson. Did I say it right?
Yeah, Beetson. It's the T before the S. Yeah, so yeah, hi. So I've been doing bookkeeping, account stuff for since I left school, so 35 years now. And 10 years ago, actually 12 years ago, I met Alison Ball. I think it was 12, 13 years ago. She inspired me to do a couple of little things, and then
I'm going to correct you on Alison because that's if I didn't know you that. Alison has inspired lots of people. And I called because I'm on the Intuit International Trainer Writer. So poor Alison had to deal with me on the US side, and I called her my handler.
Yeah, that makes sense. Yeah. So basically, a couple of years after I met Alison, I had this email out of the blue asking me if I would be interested in joining the UK Trainer Writer Network. So that was in 2014, and I've been sort of helping them out doing stuff ever since. I mean, I was actually running a course this morning, so I've just sort of finished that course certification. Sort of, over here we do it over 3 days, sort of three 2.5 hour sessions on that. So yeah, still heavily doing that. And then while I was learning all about QuickBooks stuff and thinking about the things that I do day to day when I'm not doing QuickBooks, which is accounting and bookkeeping. There were some things that I thought I could do better than I was already doing, which I couldn't do in the software, which is why I sort of started to think about developing nettTracker.
Okay, and so nettTracker. What was the compelling reason to start? Well, yeah, okay, let's start with what was the compelling reason to start nettTracker and what problem does it solve?
Well, originally when we started it in 2019, my main focus was the whole fixed assets. So when I worked in practice, even if a client file had 10 assets, every file that I had to review or help put together at the end of the year had a fixed asset register, usually in Excel, and it meant opening up the Excel file, looking at what assets they had, looking at what assets they might have purchased in that year, looking at what depreciation I've got to move from one column in Excel into another, and then going into QuickBooks or whatever it is that we were using to do a journal to bring everything up to date. And I just thought, I'm sure I could just shortcut this. So instead of me having to do all of these steps, I could probably get it down to for one step once a year. And that was my initial reason for creating the software, to simplify the whole fixed asset process, ideally for accounting firms where they might have let's say 400 or 500 clients where they have to do this for every single one, to generally start automating all of it.
Okay. And so is the end run goal is that this is the year end tax adjustment? Correct me if I'm wrong. I'm totally open to making sure I get this straight.
Yeah, so it can do, if you're working or calculating it on for tax purposes, yes, it can help with that. But all of our adjustments are made on a monthly basis. So that was one of my other sort of bugbears, really, is that if you prepare a set of accounts, and many do, they'll look at what's happened during that year, and then one journal goes in, let's say December, for this massive value.
Right.
And then if you run a profit and loss by month for that particular business, you have, rows of profits in each month, and then you have 1 month with this huge loss,
right,
because everything's just been journaled into 1 month. And that's another reason really for having the software, and not just for the end of year stuff, but lots of businesses have to prepare a management report every month or every quarter. So instead of having to do all these journals, it's just everything should be just done for you.
Right. So let me paraphrase back to see if I've got this straight. So really, this is to keep the financials in order and keep the balance sheet clean of what the company actually owns, right?
Correct.
Based on the assets, and we want to keep those assets current. So the balance sheet is really accurate month in and month out, not just at year end. So if they're going to go for a loan, or if they're going to sell, or they're looking for a valuation of some sort, they've got this automated way of having this in the moment rather than this manual process, especially if you've got a CFO. I would suppose this would be if you're yeah, okay. Did I paraphrase that correctly?
Yeah, no, absolutely right. And I think, Kelly, is from what you've said, is that and I don't know the exact split, but if I was to guess, I mean, actually most of our users are not accountants in an accountancy practice. The majority of our users are accountants in industry that have to actually prepare a set of reports every month or every quarter. So it could be the one, financial controller in an organization, as opposed to an accountant that's looking after 500 clients. Now we have got a few that use it for we've got one that's got about 300 clients attached, but the majority it's one business and one client or one company that they set up.
Oh, okay. That gives me a little bit more insight, and it totally makes sense. So this is really for the CFOs, for the controllers, to send accurate reporting out to the stakeholders.
Well, I mean, yeah, that's how it seems to be. I mean, that's not how it was originally designed, because it was designed for accountants to basically automate all of their stuff going forward. But at the moment, most of our users are, the CFOs in business.
Right.
Although I'm trying to sort of gradually swing it so that we get more accounting firms on board.
Oh, okay. That was going to be a question I was going to ask, who your target market is. So your target market that you had in mind is not the market that you have been engaging with, but you still like to pull it back into the accounting space.
Yeah, exactly.
Yeah, all right. And that accounting space, having been with Intuit for 10 years. Yeah. Not with, to qualify, not with Intuit.
But
part of the Trainer Writer Network. And you said you're writing a course. I'm going to go a little off topic right now. You're just finishing up a course for them. I am just finishing up a course for a company called Financial Sense, and I'm building out a Workflow Academy video course. It is no small feat to build a course. So hats off to you for building one that you've been working on. It's hard to build those, isn't it?
Yeah, it is. And we're actually, so we presented, I presented one today, but the sort of team in the UK are in the middle of actually sort of ripping apart the UK course certification and creating a brand new one. So everything that we've done for the last 4 years, so just before just before COVID hit, so it hasn't really changed much since a couple of years before then. Yeah, we're basically thinking, what can we? It's like, well, we're basically scrapping it and doing a new fresh one.
Oh dang, this is brand new. So I have open. It's a field day for me. And I've been given a lot of autonomy on writing this course. Okay, so that was totally off topic, but I feel the feels on this.
Yeah.
And we are human beings as well as business owners, right? So I thought that was a fun little segue. Okay.
Yeah, sure.
With nettTracker. So, okay, we've got nettTracker. It is automating the process of the fixed assets. And that is because it is using a standard depreciation schedule.
So
how is that being done?
So yeah, I mean, I can show you shortly, but the basically in a nutshell, when a file is created, you will choose what depreciation rules your company wants to use. You might have, let's say you might have three. Let's say there's a company that's got three asset groups that might have motor vehicles, computer equipment, office furniture. So for each one of those asset groups, you might set a default depreciation rule. So you might have 3 years straight line. You might have double decline on one of the other ones, or reducing, which is declining balance on another. So if you're choosing to fully automate it, and it's an optional thing really, is that if a asset was purchased to, let's say, computer equipment,
right,
we've mapped that account, the asset group, to the account in QuickBooks. That comes into nettTracker, so we know that is for computer equipment as the asset group. We've set a default depreciation rule of whatever it is against that asset group, so we know for the next for this rest of this financial year what the depreciation should be on a monthly basis. That will start calculating, and then when we hit the next month, or we get to the end of the month, it will say what depreciation is due. Okay, we'll post the journal for that and put it back into QuickBooks.
Okay, so let's do this. Let's get your product up on the screen if you want to, but I have another question, but I'd love to have a visual of your logo and the product. People have probably seen enough of you and I for a few minutes. Let's get the product up there so we can see it, but then I still want to continue the conversation before we go into the demo. So for anybody following along at home, I actually don't know that much about nettTracker other than what Ash and I have spoken about. So this is a completely raw demo. I'm starting at the same point as probably almost anybody looking at nettTracker. So let's get that up on the screen. So we've got a nice visual there. I actually have a question about appreciation rather than depreciation. And again, I don't know. The reason you and I are meeting today is because I don't know that much about your product. Okay, perfect. So we've got nettTracker up. There we go. And my dogs are losing their minds in the background. So something.
That's actually fine. Mine went berserk this morning when I was presenting the course.
Right.
The doorbell went and the dog went mad, and I was
I'm not sure what's going on. Somebody must have come to the house, and it's a kind of I live in a walk-in neighborhood, if you will. So we're renting. I'm Canadian, but we're renting in Florida for the winter, and it's a very open community of people coming and going from your house. So who knows what's going on out there? Okay, back to you. Do you so? And again, I don't know, but I know this is a fixed asset product. Does it do appreciation? So, for example, I have a client that owns their building. Does it do appreciation? Which is a dodgy business with real estate. I get that.
Yeah, so not at the moment, but we are. So before I we go in here, so this is what I'm about to go into is it's version 1 of nettTracker, or version 1 point something. So this was our first one, and it's had lots of development over the last sort of 4.5 years. We're actually in the process of creating version 2 of nettTracker, and anyone that's actually on version 1 when we've completed this later this year will migrate onto version 2. We're going to update the menus a lot. With there's some little sort of nuances, which have sort of restricted people in the past, which we're making things a lot easier. So, and one of the things that has come up about appreciation, there will be an option in there. So what we would sort of say to someone at the moment, if you've got a building that has now been revalued and it's worth $100,000 more this year than it was last year,
Right.
is that you would sort of, as an example, you'd create a journal in QuickBooks to say, this is basically like an addition to increase the value of whatever the building is. That addition would come through into nettTracker to increase the value. And we've got a little feature in nettTracker which is called a kit. So a kit is, so you've got an asset group and you've got items that are within those assets, but you can also have a kit within that asset group. So you could have an asset group that's called land and buildings, and within that you could have a kit that's called something Boulevard, let's say. And when that was purchased, it was $1 million. When it was revalued, there was another $100,000 that went on top of that, and we could create a kit of those two items, which would say the original cost of that item and then the addition of the revaluation. So you'd show them separately, but you'd also see them combined as one value.
Okay, I got you. And again, I know that depreciating schedules are more rigid than appreciating schedules. So I can see why the depreciation part, because we've got schedules for those, right?
Yeah.
Whereas like the value of a building or land is kind of subjective to, but so we don't need to go too far into that.
Yeah. But I see, I definitely see where you come from. So.
And so for anybody who, let's just start with the basics here. You are on the Intuit App Store.
Yeah.
You and you have single sign-on, I see, with Intuit.
Yeah, so the single sign-on with Intuit or Xero or Sage.
Okay, good. I was going to ask about those. So those are your 3 integrations. You have single sign-on. And if for anybody who doesn't know, Intuit, to be on the Intuit App Store, has quite a rigorous security protocol that you need to go through. So good news there for you. And the single sign-on mitigates tons of problems as long as somebody is behaving themselves with single sign-on with Intuit, right?
Yeah.
But you can't fix everybody. Okay, so you integrate with all 3 products, and it is what is called, and I'm going to do an explanation of this, it is what is called a 2-way sync. And that means that nettTracker can pull. Do you like when my arm disappears? I have not in my office. I have a she shed office. It's really quite sweet. But I'm renting a place down in Florida for the winter, and it's a purple bedroom. So I got to have this virtual background so I don't feel like I'm in a 5-year-old's bedroom. Anyways, okay, so back on topic. It is what is called, and I'll double check on the others, but I think it's the same. It's a 2-way sync, which means that nettTracker is pulling the data from a QuickBooks Online file. And then you're not integrated with QuickBooks Desktop, or are you?
No, just online.
Okay, because Web Connect, a lot of apps, actually, people don't realize this, how many apps connect with QuickBooks Desktop and sync data using Web Connect, but that's a whole other topic. Okay, so you are pulling the data from the QuickBooks file, and then a lot of apps, that's all they do, is they pull the data and then you do something with the data over here. You then sync the journal entry, which we're going to talk about after. You sync data back into QuickBooks, and that's where the efficiency is coming from, is not manually doing these depreciation journal entries every month. And I think you told me you are pulling the data every 2 weeks and you're pushing the data back in once a month, correct?
That's right, yeah.
Okay.
And,
Okay.
yeah, I mean, and you can do it, you know, I mean, that's when it's automated, but as I'll show you, I mean, you can sort of do it whenever you want manually by pressing the button to process.
Okay, so you can refresh it. You can,
Yes.
you go, or I guess that's not a refresh, that's a push the data.
Yeah.
And then same deal with Connect and Sage Cloud.
Yeah, they all work in exactly the same way.
Okay, I figured as much. All right. Right.
So I'll get myself logged in. And so when I'm logged in, so this is like what we call it, the organization dashboard. So I can have, you know, if I'm an accountant that's looking after clients, I'll have, you know, multiple clients that I can access. And if I want to select one of them that I'm working on, I'm going to select this join nettTracker and open this up.
Can we go back a second? I have a question over there.
Yeah, yeah.
And I don't particularly have any dignity, so if it's really obvious, then that's fine. So, okay, so what are the, I get what the asset register is. That means you're connecting to it. Oh, in QuickBooks Online, does it matter what the description is? You know how you have the account and then you got that description thing, and some of that description, I can't remember what you call that. You know how in QuickBooks Online you've got the account, so it's an asset, and then you've got that odd little what kind of item it is, and that allows you to either reconcile or not reconcile balance sheet accounts.
That shouldn't make any difference to us.
Okay. I was just okay, because sometimes it does. And then you've got users. What does the users mean?
The oh, sorry, yeah, I'm looking at on the far right. So this is how many users are associated with a particular company. So you've got here
in nettTracker or in QuickBooks Online?
in nettTracker.
Oh, okay, got you. Okay, so you can have multiple people access this app.
Yes.
All right. Okay.
Now,
Good.
they don't actually have to. They don't actually have to have a QuickBooks login. So you know, to be able to use nettTracker, because you might want to keep somebody out of QuickBooks and just give them access to this side of it.
All right, that's good. And what does the accrual prepayments mean? Why is that turned off and turned on?
So that yeah, so I hadn't actually mentioned that yet, but so we can monitor accruals and prepayments in nettTracker. So that could be prepaid expenses, that can be deferred income, that could be accrued income and accrued expenses, and that's all within the same subscription. So there's no additional, you know, fee for that. And so I've got it in this particular company, I've got it switched on.
Right.
So that's noted there. So you've got the name of the company. So this is the company file, and this is the organization. So the person that's paying for the subscription. You could have a bookkeeper that is actually being granted access to, or they might work with 6 accounting firms, and those 6 accounting firms could have their own subscription, and that bookkeeper works for all 6, but they only need one login to find everything in one place, so they don't have to log in multiple times. They've just got the one.
Awesome. So we'll call that an accountant dashboard.
Yeah.
Okay. Good news. Back to the, if I could, because the prepayments, this part has me a little, it's a little fun because I don't want to do recurring transaction. I don't want to do manual entries. I don't want to do recurring transactions. And I guess I could accept a payment in the bank feed and code it to prepayments, but this would automatically do the entry for things like insurance.
Yes.
Nice. Okay. It's funny because I was thinking about that when I first saw what your product did. And then there was this part of me, because I had a SaaS company and we actually did a lot of entries on deferred revenue. And so, but I have a couple other ones where this insurance, which some people don't care at all. Some people it's just a monthly amount, right? But if they have significant insurance, okay, I'm done. I got it.
Yeah, and actually, while we're on the
Very
screen, so when we're developing, or while we're developing the version 2 that I mentioned, so what's been in the back of my mind for quite some time now is dealing with loans. So another thing that I had to deal with when I worked in an accounting firm was you can have a HP high purchase loan that's associated with an asset. You might just have a loan, a bank loan, a mortgage. All of those loans still need to be agreed in the balance sheet when you prepare the accounts at the end of the year. You know, have you put all of the required interest on that loan? Have you allocated all of the payments correctly on that against that loan? So while we're developing the new version, loans will be another, feature within there.
nice.
That's
So you're going to
so I'm-
do, you're going to do the liability side.
yes,
Very nice. Oh,
yeah.
okay. Yeah, funny, because I was thinking about that too. I'm like, could this post that, and now I'm getting way out here because I know this is part 2.0. Could it you could put in a schedule, I guess, and it would post back the interest versus the principal, because those aren't always the same, right? I'm way out of line here. Do you want to do what you want to do?
Yeah,
So thinking about all of these things that would be nice if it was just like automated, right?
yeah. So this is the plan, but we'll we'll see, and we're happy to sort of chat about if people find something easy or a preferred method. So our idea while we're working on this is that, as an example, you've got whatever loan it might be, hire purchase. Let's say it's a hire purchase loan. So you've got an expected number of repayments. Let's say 3 years, 36 repayments.
Right.
So those repayments could be, let's say it's $36,000. So you're paying $1,000 a month off. Now that $1,000 will actually include interest, because the whatever the original loan was or whatever you needed, but the amount that you're paying back in total is 36,000. So we will have a schedule which knows what just the interest element should be for every payment, so that it could be we could straight line it. So we'll have an option. Do you want to post your interest on a straight line basis? Because as I spoke to an accountant recently, they said depending on what rules they're following, sometimes they have to straight line it, and sometimes they'll have to sort of almost like a reverse of similar to your declining balance on depreciation, where you have a large amount of interest first, and it gradually gets smaller and smaller. We'll have that option. So we'll be able to calculate what the interest should be for every single month, and we will just post an interest journal. And the idea being that, so if I've got a liability account, that's going to put a debit in the profit and loss for my interest, and that will credit my liability account for the loan.
Right.
And then all of the payments that go out of the bank, we don't need to worry about splitting the payment for capital and interest. The payment, we can just allocate that directly to the loan, because we're just paying off that loan balance, and nettTracker is dealing with the interest element. And then what we'll have is so we know what the interest should be over the whatever period we're up to. We know what the payments should have been up to that point in time. So we'll have an expected loan balance at any given time, just like we have with assets and accruals.
Right.
And when we have that balance, we'll then look at the balance what is the balance in QuickBooks at this time, and they should be exactly the same, because what we're expecting to see. If they're different, that means that either a loan payment has been missed, or a journal's been missed, or something else has been posted to that. So whatever we do in nettTracker, with every balance sheet account, whether it's an asset, an accrual, or prepayment, we are basically keeping an eye on that balance to make sure that they should be in line.
That's, you know what, that would be brilliant. Can you imagine that for the startup community? Or I can imagine that for the startup community. They got loans all over the place, and some of these loans are insane. To have better reporting on that would be amazing.
Yeah, I mean, I think so, because
Yeah.
otherwise they just get left, and it's just another adjustment that happens at the end of the year, and they think, oh, I don't owe that much. Well, you still do owe some money because you've not put the interest on.
Right. Yeah. Okay. Love it. Okay. So look, the liability side would be awesome, especially in that use case scenario. Okay, I'm listening now.
Okay, cool.
I'm watching.
At the moment, so I've logged in, and this is the company that I'm currently looking at and working on. This is at the dashboard, and at the top it tells me what the current financial year is that I'm working on.
Right.
So currently in this version of nettTracker, we have quite a strict financial year where it gets to the end of the year and then there's like a hard close.
Okay.
We're actually based really on customer feedback, and just to make it a lot easier to use, we'll just like you have in QuickBooks, we'll have like a rolling year end,
right,
where we can run a report really between any two given dates and see the movements in between. Where at the moment it's sort of fixed on this sort of financial year that we have at the moment, but yeah, so that's all going to change.
Oh, can we go back to something just so that people listening can have the fun that I have? So you pull the data every 2 weeks. What do you call that?
What, synchronization? Data sync?
So what do you call that time frame? What do you call 2 weeks?
Oh, a fortnight. Oh,
right, a fortnight. And you know where that first started to twig with me? I mean, I know it's common. That's not the term we use over here. But
bi-weekly?
Yeah, no, we use every 2 weeks or bi-weekly or whatever. Fortnight isn't a term over here, but Zapier,
yeah,
the term fortnight. I don't know if they still do because I haven't tried to set anything up for every 2 weeks, but they used to use fortnight, and I had to go double check. That's 2 weeks, right? Okay, carry on.
Yeah.
I wanted to add, because you got the British accent. It's always fun to, you guys, the British accent is so beautiful and lilting. I wanted to go with a little British thing. Carry on. Don't let me stop you. Keep going.
All right. So below that, we've got one thing I always point this out when I'm sort of demonstrating is that we're in the UK, so our dates are day, month.
Right.
When we're syncing to a US, Canadian file, whatever their date preferences are, it would be month, day.
Okay, I have another question related to that Canadian US thing. I was going to ask about that. Okay, so because we pick the date in QuickBooks and set in our settings what date we want, code, whatever you want to call it. You got it there in pounds. In the US Canadian files, it's dollars.
Yeah, so however, so when you initially set up the file, it comes through and the first thing it says, what's the first financial year that you're working on?
Right.
You select those dates, and then it will automatically detect the home currency of that file, and that will then determine what the currency symbol is there.
All right. And I don't want to go there yet. It'd be interesting to know what happens with the multi-currency files, but let's get through what you want to do, and then the multi-currency. Okay, well, why don't I just ask, does this work with multi-currency files?
Yes, it works with any file really. What we detect is whatever the home currency value is.
Okay.
So if you buy it in a different currency, it doesn't really make any difference to us, because we'll just look at the actual value that's on the balance sheet.
That makes sense, but it was worth asking. Okay.
Yeah, no, sure. So in this first bit, this fixed asset area, it tells me here what is the value of fixed assets per my fixed asset register. And then below that, the external book value is what is the value of assets per the balance sheet. So that's looked at QuickBooks. So it's looked at the QuickBooks balance sheet report, and that's as of the next reporting end date, which here is December 24. So it's pulled out the fixed asset total, and those two figures should agree. Now, if I were to, so I'll go into this QuickBooks file, and in fact, I'll I'll pop on a supplier bill within here. That one will do. Yeah, I'll do it for March, and I'll just put number 11 on there. So I'll add a new purchase, and I'll just have to do a refresh here.
Is the refresh in the browser or?
You can do either. So I've just refreshed on this little summary box.
Oh, okay. What's the on the top right? What's the request company processing?
That's when we push journals through.
Okay, got you. Okay, that makes sense.
So now I've got a difference because I've just purchased an extra asset and it's not on the asset register yet. So we can automate that process. So within my company settings, we can automate the process every 2 weeks, every fortnight. We can put the asset onto the asset register for you. Or as I've just done then, if I go to the asset register and look at transactions,
right?
I'll just do a little refresh there as well. That entry has now come through for me to decide what I want to do with it. So very much like a bank feed in QuickBooks. This has come through into pending, right, and then it will show as processed. You can ignore a transaction if it's been created as an asset by mistake. You need to make sure you go back in QuickBooks and change that. If I create an asset within here, so I'm actually going to go ahead and do that. If I go to start creating the asset, so it's going to bring through the asset details that's within the entry in QuickBooks. You can use classes. You can we've just released an update, so you can post to locations as well. Just got location settings switched off, so you can just use a text field if you wish on that. The purchase date has come through automatically. It's automatically going into the asset group for catering equipment, and because I've got a default against catering equipment of 4-year straight line, it's going to 4-year straight line, but I could choose another depreciation rule if I wished, and you can create your own depreciation rules in the depreciation area setting. Well, we can take a look at that in a minute. So if I click OK against that, and then take a look at, if I come back to the dashboard first off, I won't have any difference now because it's gone onto the asset register. If I go and take a look at the asset register, so I've got various groups across here for the different asset groups. I put that into catering equipment. So that's going to be deep fat fryer number 11. So within my asset group, I've got the name of the asset that's been purchased. Right. You can use asset references if you wish, the class, location if you're using those, when it was acquired, when the depreciation started, because you can set a later depreciation date if it's going to be put into service later. You can also defer depreciation. So if you pay a deposit for something and or whatever it is that you've bought, you don't know when it's going to actually be used, you can hit defer depreciation and then start depreciation as and when you need it to. And we can see the depreciation rule that's in use. If it was purchased in a previous financial year, you'd have a brought forward cost. All of these in this asset group have been purchased this year, so they're shown as current year purchases. You've got adjustments for disposals. You've got the depreciation that was brought forward from a prior year, depreciation in the current year, adjustments for disposals for depreciation, the current net book value. You can set a salvage value. The asset won't depreciate below that value if you have one set.
Right. Okay.
And if you mark an asset as disposed, you can note what the sale proceeds were. It won't actually create invoices, so you'd have to create your sales invoice for that disposal in QuickBooks. But you can note what that sale value was, and then combined with the net book value, you'd work out what your gain or loss was on the disposal of that asset if you were to dispose.
Okay, nice. I have a question.
Yeah.
So we can select all there, I think. What are we going to do when we select all? And
So,
then I want to know what we can do in here. Okay, so, right.
so this is a pretty new feature within nettTracker, the little tip boxes,
Right.
because we just released the ability of using locations. So I don't have it on here, but I've got classes enabled. So all of these assets are currently to the class. Well, I say all of them. We've got some of them to commercial and some of them to marketing. If I wanted to put all of those assets to a different class, I could say, well, put all of them to blue chip, and it will change the class on every asset.
Okay. I'm just making a note of this. It's not that I'm like penning a love note while I'm speaking to you. I made a note.
And because when we just released, so we've been asked quite a lot, can we put our journals to locations? And we, previously we couldn't. And then we released the feature, and I said to my, my partner, I said, if we release this feature and everyone's got locations, I don't want anybody saying, how can I change my locations? No one is going to be selecting edit, which is what we do normally, go in there and edit a file and change it. No one's doing that one at a time.
Okay.
So we need to make sure before we actually release locations, we know a way of updating those in a batch. So that's why we had that added at the same time.
Okay, I love that you got out ahead of that.
Yeah,
right.
I just didn't want the questions coming through.
You were ahead of it, not behind it, which people love, right? Good for you. Nice.
So if you do select one, if you just tick one of the assets, then the little tool option opens up where you can choose to just go in and edit it. There's not a great deal that you can change because the value is what it is. We can't change the value of the asset, that of what it was purchased for.
Right.
The class and location and the depreciation rule you can change. If you do change the depreciation rule, it will look at what is the existing net book value of that asset, and based upon what that depreciation rule has been changed to and what the original purchase date was, it will say, well, there's X amount of value left, there's X amount of months left, so we'll now apportion the depreciation on the remaining months.
Right. Okay.
If you make that change.
Okay, I have another question. Can you go to edit? Oh, go to edit something for me. And then go to edit it. And then, so let's take class, for example. Just do the drop down for me. Okay. Gotcha. All right. I just wanted to see a few things in action. Check. Okay.
Cool. And that's and the same with the depreciation.
Right.
You've got the ability of I can mark the asset as disposed. I can delete the asset. So if an asset has gone on by mistake, so if I do choose to delete,
right.
It will go through a little check. Am I sure that I want to delete this asset? If I do, I've got the ability of reversing the depreciation. So any depreciation that's already been posted for that asset that shouldn't have been posted, I can reverse it, and I can choose the date of, it creates a journal to flip the depreciation round the other way. Because if I don't do that, my balance sheet won't agree because it will have depreciation in there that it shouldn't have done.
Right. So I like that you've got some guardrails around this.
Yeah. So that's in there, and it's a similar when you come to dispose of an asset.
So I have a question, and maybe this is obvious. We're going to dispose of it in here. What does that do in QuickBooks? Why wouldn't a sale of an asset in QuickBooks post to here, or does it, or what am I missing? So
this is how we recommend that you deal with an asset disposal based upon our sort of our guidance, is that if you if you raise the sales invoice to dispose of the asset, or you receive a deposit into the bank,
Right.
Where you deposit the funds, we recommend that you put that, so the sale, the credit, goes to the profit and loss account for gains and losses on disposals of assets.
Right. Okay.
When we create the disposal here, so if there's 10,000 in the asset and 5,000 in the cost and 5,000 in the depreciation, it will then create the journals to take 10,000 out of the asset cost, take 5,000 out of the depreciation, and put the other sides of those journal entries into the gain and loss, profit and loss account.
All right. That makes sense. Okay.
So that what you're left with then should be the actual cost of whatever the net book value of the asset was, that goes into your profit and loss when it's disposed, and then whatever proceeds you get in, that goes into the profit and loss account.
Right. So the first one was going into the balance sheet. It's fine. But yeah. Okay. I got you. All right.
If I just take a look at depreciation, and I'll select the asset group that I had here. So in the depreciation forecast, what we see here is the depreciation forecast for every asset to the end of this particular financial year. With this asset at the bottom, I've not actually processed any depreciation yet. So it's forecast, but it's in red because I've already processed depreciation to the end of November. Now, what I can do is I can bring everything up to date by going back to the dashboard and saying, well, okay, I've missed that asset. I'll go back to the previous month and process that depreciation. So what that will do now is it will start posting journals into QuickBooks. Now, those journals will all be dated. If I just take a quick look at that. Now, there's only for one asset, so there's not going to be many lines on here. Oh, I changed one of the settings when I was chatting to somebody the other day. So on here, they've all been dated the 30th of November. Now that's because we've got a setting in nettTracker where if you've closed, let's say you've done your management accounts to the 31st of October,
right?
And I've just added that asset. I don't want another 6 journals going into the previous periods where I've already reported against.
I was going to ask about a guardrail on that. So if it's a closed period in QuickBooks, you've closed it, the books in QuickBooks, then you can't post in that past period without going into QuickBooks and opening it?
There's a couple of things there. So QuickBooks will actually allow the journal. So if I had closed the books and I tried to post it from a previous period, QuickBooks will actually still allow our journal to go through, but it will date it with today's date.
Oh, okay.
So I mean that's like a little QuickBooks quirk, and we think can't kind of do much about that. But if you want to prevent those journals sort of for hitting those already reported periods, when you add this in, I'll just come into my settings. Where I've turned that, I've turned on the feature disable backdated journals. So if there was no tick in that box, then that would have created a journal for March, April, May, June, July. Even if
the books were closed?
If the books were closed, it would have created 6 journals, all with today's date.
Today's date. Okay.
Yeah.
Yeah. You know, it's an odd thing. I'm a big believer in closing the books. It's actually a step in my workflow. It's like, really, you have to have a step to close the books? Yes, because it's easy to forget and it's so important, right? But what's interesting is there are some things that we can do that even if you close the books, QuickBooks still allows, right? So you have to be really careful. Updating historical transactions for items. I don't know if that's a thing you can, let's say you change an item in QuickBooks and then it gives you the option to update historical. Doesn't
Yes.
matter. It doesn't really matter if it's all going to go just to a sub account and cost of goods sold or something. But if you're going to change it from an income to an expense account, let's say it's a billable item.
Yeah.
It'll let you. It's like, yikes, right? Okay, that was not a segue. That was a road trip. My apologies, because we got to get through your product.
So I've actually, if I just quickly nip into that asset that I added earlier. So now that particular asset has got some depreciation processed against it. And in fact, if I open that up and just look at if I look at the details of the asset, that tells me all the depreciation that's been processed, like a little mini audit log, and you can view you can view more details within there as well.
So on the audit log thing, can you see who's done things?
We can't at the moment. I mean, that's something that we are sort of thinking about, having a sort of slightly more detailed audit log in there. I'll just come back within there, and I can also look at what's projected. So I could see that there's more depreciation due in this financial year and what the ending value of that asset would be.
Nice. Okay, that's a nice little, I like that. That's a little bonus feature.
Yeah.
Nice. Well, I wouldn't even call it a bonus feature. Nice. Okay.
I'll just sticking with the assets for another minute or so. When you actually start a file from scratch, if you've got an existing asset register, there's the ability of importing those. So there's a template you can download, pretty much copy paste, what the original description was, what the original cost was, what the accumulated depreciation to date is. Put that into the template and import it. It's pretty self-explanatory, really, on how that works. Then you've got your asset group, so you can create your asset groups, and there's the tool there to map them to your accounts in QuickBooks. And I can see on here as an example, these are for computer equipment, the depreciation on computer equipment,
right,
and how they're mapped back into QuickBooks. And then just down at the bottom of that, you've got your depreciation rules.
I have a question back one screen. You don't need to go back. Chart of accounts. Do they have to be numbered? I mean, I believe in numbering, if anybody cares.
No, they don't. So I generally don't. I generally don't number them. But no, it's entirely up to the user.
Just checking. Okay.
Yeah. So your depreciation rules, you get. I think there's about 12 that we normally have in here by default, and then you can create your own. So if I went to create a new one, you could give the rule a name. So let's say 44 months. You can have straight line. It'd be just a straight line over whatever number of years. So there's most of those already in there. Reducing balance is your declining balance. We've got double decline. And so for some businesses where they've got a lease that expires in 44 months or however many months, so it's not an equal year, you can just choose to set that and say, well, actually, that needs to be set for 44 months. And I could save that. So I could use that as my own particular depreciation rule for that. Okay. In a sort of nutshell, that's sort of it on the assets. And I can just have a quick look at how so below that we've got prepayments and accruals, and they all work in a very similar way to the assets, really.
Okay.
Now at the moment, we have to. So if we've got a prepayment or an accrual, we have to sort of create it manually. What we're planning in version 2 is that, so just like we have our assets where we've coded an asset to that category and it comes through into transactions, our plan is to, if someone's coded a bill to prepay, then that will come through and we can choose to deal with that however we wish. We'll choose to prepay that to a particular profit and loss or asset or balance sheet account. So with your accruals and prepayments, you've got your, first of all, you've got your accrual or prepayment groups. So you could have multiple prepays within a prepayment group. So if you wished on your balance sheet to have prepaid insurance, prepaid marketing separately, you could do. Personally, I just have one. If I was doing a set of accounts, I would have one that's just called prepaid expenses, and everything goes into the one pot. If I, in fact, let me put a very quick bill in. Actually, I'll do it from here. Be easier to whack another bill in. So I'll do a bill. And I'll just use that. I'll change that to a profit and loss account this time. Actually, I'll put insurance. So depending on, some businesses will sometimes just code a cost directly to the profit and loss category. So that's what I'm going to do here. I'll put 25,000. And some businesses will put it to the balance sheet first.
Right.
We can deal with either of those scenarios. So I'll just change. I'll leave the date there, 21st of March. So I'll save that. If I just looked at so I'll just pull up the report. Profit and loss. By months. Yeah, so I've got a massive jump in March. So if I were to come into nettTracker and I wanted to deal with that prepayment, so I could just go within here. We can create them manually, or there is actually a CSV. So if you had a load of prepayments, you could import them on an Excel file. So I'll just choose to prepay that, and that's for insurance. And I'll actually put, it was from 15th April 24. I've got the profit and loss category, which is insurance. The date of that, which was 21st of March 24, and the total amount to prepay was 25,000. Now it could be that although the bill was dated 21st of March, it's not actually, it's covering a later period than that. It's covering from the 15th of April. So I'll say that this is due from the period 15th of April over the next 12 months. And if I'd actually put that value directly to prepay in the balance sheet, then I'd tick that box, because if I don't tick the box, it's actually going to take the value out of the profit and loss for me.
Got you.
So if I click OK against that, and when I initially click OK, it's not creating any journals yet. So if I take a look at my statement of prepay, let's change that page size. So what we have on this statement at the moment is a list of all of my current prepays that I've put in. And at the top is, or on this column here down the side, is these are the current balance of all of those prepayments.
Right.
And the total of these prepayments at the moment is 54,000 odd. And this is the value in my balance sheet from QuickBooks, which is 54,000. So they should always stay in line.
Right.
If I looked at my projections of my prepaid adjustments, so again, it's backdating. I did actually turn that setting off, so it's going to actually put these journals back into March and moving forward. It's taking 25,000 out of March. Due to my settings in nettTracker, it's calculating prepayments on a number of days in a period. So for April, it's got 15 days worth.
Right.
May there'll be 31 days worth, and so on and so on. That's why the value is slightly different
Okay.
in those months, because it's based on the number of days. You can choose to straight line it if you wish. There's a setting for that.
Okay.
So if I, oh no, stay in nettTracker. If I come back to my dashboard and then so request back up to November again, process that.
Can you hit that process button with your keyboard with the enter?
No, I don't think I can. I think I've got to mouse click that. So I need, after I've selected the date, I probably could, but I need to sort of select it from there.
Okay.
So if I were to look at my journals, so yeah, those journals are now coming through for each of those months because I turned that stop off, and that's putting those through. You do have the option. So with fixed assets, if you had 1,000 assets, I thought I clicked on that journal. Just give it another try. If you had 1,000 assets and you only have one asset group, you would just have one or two journal lines debiting the profit and loss and crediting the balance sheet. So you basically get a summarized. So instead of having a journal with 1,000 lines on it,
right,
you can make sure it's condensed. We used to have the same for prepayments, but there is an option now where you can choose whether you want your prepayments to be detailed or condensed, and you can do the same with assets if you want.
Right.
I'd advise against having a journal getting fired through with 1,000 lines on it. You have too many of those, and QuickBooks Reports doesn't like it very much.
No, it really doesn't like it.
No, so,
and I don't think this is a thing still, but remember when the journal entries would go out of balance for no reason at all if it was too long of a journal entry?
I can't remember that. No, but
oh yeah, that was a thing. Okay. What do you mean the journal entry doesn't balance anymore?
Yeah.
Okay. Anyways, doesn't matter.
Yeah. Yeah.
So what is that done then? So, right.
If I looked at my prepay statement, so now I've got that insurance from April, which had originally had a £25,000 adjustment over 12 months. So far, I've released 15,000 back to the profit and loss, and I've got 9,000 left. So that's how it works. And the accruals work in very much the same way. You can release an accrual in full. You can part release an accrual back to the profit and loss at any time.
Okay, cool. Okay, well, that was a great little tour. I appreciate it. And
thanks, Kelly.
I certainly see some fantastic use cases for this.
Yes, I mean, my whole idea on this is just so whether it's the financial year end or whether it's a business that has to report things every month,
right,
is just to simplify and make things as automated as much as we possibly can, and without having to create a spreadsheet for every different scenario, and then if a spreadsheet formula goes a bit wrong, and then why doesn't that agree, and why doesn't that agree to what's in QuickBooks? We should never really go out of balance unless someone's put an extra entry in manually or deleted something that they shouldn't have done. Everything should always really agree.
So okay, cool. Well, I super appreciate you showing me this, and I'm gonna sign off. You and I aren't done, but I'm gonna end the recording. And I really, really appreciate you showing us nettTracker, and I certainly see some cool values in it. So thank you very much for sharing that. Okay.
My pleasure.
All right.
Thank you.